Most people think the stock market is this giant casino where fortunes are won and lost overnight. But what if I told you the stock market is actually nothing like a casino at all? In fact, it's the single greatest wealth building machine ever created in human history. And it's the reason some people retire comfortably while others work their entire lives and still struggle. And here's the wild part: most people don't understand how it works. Not because they're not smart, but because no one ever taught them. So, in the next few minutes, I'm going to break down exactly how the stock market works in a way you've probably never heard before. Simple, clear, no jargon, no confusing charts, just the truth. The truth that schools never bothered to teach. If you don't understand how the stock market works, you end up working your entire life for money. Every hour, every paycheck, you trade time, something you can never get back, for money. But once you do understand how the stock market works, the equation flips. Suddenly, money starts working for you. It grows while you sleep, it grows while you work, it grows while you spend time with your family, travel, learn, or do absolutely nothing at all. And here's the problem: schools don't teach this, most parents don't know this, and society makes investing seem scary or risky, so people avoid it. Today, that ends. By the end of this video, you'll understand the market in a way that makes you say, "Oh, why didn't anyone just explain it like this before?" Let me start with the biggest misconception. The stock market is not a casino. A casino is designed for you to lose. The stock market is designed for companies and investors to grow. So, what is the stock market? Think about Amazon. Amazon is a marketplace for products. Uber is a marketplace for drivers. The stock market is a marketplace for ownership. When you buy a stock, you're not gambling. You're not buying a lottery ticket. You're buying a tiny piece, a literal slice of a real company. Apple, Tesla, Nike, Google, real businesses. If the company grows, your ownership grows. If the company earns profits, some of those profits go to you. If the company expands, innovates, and gains customers, the value of your piece increases. Owning stock means you own part of the machines, buildings, patents, products, teams, and ideas that company creates. If Apple releases the next breakthrough product, that success doesn't just make Apple money, it makes you money too. It's that simple. But nobody explains it this way. Now, here's a question people often ask: if companies are so successful, why do they sell shares at all? Because they want to grow faster. Imagine you own a small bakery. Business is good. Customers love your food. But now you want to open new locations, buy better equipment, hire more people, and expand. That takes money. You can either take out a loan and owe interest, or you can sell small pieces of your business to investors. Big companies do the same thing. They sell shares to raise capital so they can grow faster than they ever could alone. New stores, new products, new markets, global expansion. And in exchange, investors get to own part of that growth. That's the stock market. Now let's talk about the part that confuses almost everyone. Why do stock prices move? Stock prices move for three main reasons. First, supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down, just like concert tickets or limited sneakers. Second, company performance. Companies report earnings, revenue, profits, growth, and future plans. Strong performance usually pushes prices higher. Weak performance usually pushes them lower. And third, the most important one: future expectations. Stocks don't move based on the past, they move based on what investors believe will happen next. If people expect growth, innovation, or dominance, prices rise, often before it happens. That's why news, interest rates, inflation data, earnings forecasts, and even tweets can move the market. The stock market is a giant prediction machine, pricing the future. So, how do you actually make money? There are two main ways. First, capital gains. You buy a stock at one price and over time it rises. The difference is your profit. Second, dividends. Some companies pay you cash just for owning your stock. Quarter after quarter, year after year. You don't work for it, you don't show up, you simply get paid. That's passive income. Now, here's the part that shocks most people. You don't need to be a genius to win in the stock market. You don't need to day trade, you don't need to stare at charts all day, you just need to invest for the long term.
If you buy strong companies or simple index funds and hold them over time, history shows you almost always win. The market goes up and down in the short term, but zoom out far enough, the trend is up. Why? Because companies innovate, they solve problems, they create new technology and new value. The world grows and the stock market reflects that growth. And here's the truth people don't want to hear. The biggest risk isn't investing. The biggest risk is not investing. Inflation eats your savings. Cash loses value. Your time is limited. But the stock market grows with the world. Your money works 24/7. It never sleeps. It never takes a break. That's why wealthy people invest, not because they're lucky, but because they understand the system. The stock market isn't magic, it isn't gambling, and it isn't just for the rich. It's the greatest wealth-building tool ever created, and it's available to you. If you want a video on how to pick your first stock, build your first portfolio, avoid beginner mistakes, or follow a step-by-step investing plan, let me know. Your journey to financial freedom starts the moment you decide to understand this. And today, you just did.